Real estate is changing. The market's changing. You're starting to hear a lot of people say that now. The funny thing is, it really started changing over a year ago. People have been around for a while, knew that, and they changed some of the ways that they did business in anticipation of what's coming now. Well, today, we've got a few really sharp investors in different markets across the country, and they're all going to tell you what they're seeing, what they're doing, how they're staying successful, and what's working right now on the Sub 2 Deals Show. Hey, deed grabbers, welcome to this episode of the Sub 2 Deals Show, where we talk about all things subject to. Occasionally, we'll talk about other real estate investing topics, but it's always something to help you with your real estate investing business. If you're listening to us on Apple or Stitcher or Google Podcast, and you'd like to see our smiling faces and watch the podcast in video form, subscribe to our YouTube channel at sub2tv.com. That's SUB2TV.com. We do a podcast somewhat infrequently lately. It's really funny how actually investing in real estate can get in the way of some of the influencer stuff from time to time, but it tends to, especially with me. But we also do video podcasts there. We do other videos, short videos, all kind of tips and things to help you with your real estate investing business. And if you haven't yet, shameless plug here, pick up a copy of my book, The 12 House Blueprint. This is where I'll lay out my business model, what I've used almost exclusively for the last 10, 15 years, buying houses without banks, selling them with seller financing, creating upfront cash, cash flow, and cash on the back end. It is the best of wholesaling, being a landlord, and rehabbing without any of the headaches associated with those three jobs. So get a copy. We've been on the bestseller list on Amazon in all three categories: buying and selling real estate, creative finance, you name it. We've been there. So go over there and check it out. Or you can get it directly from us at 12houseblueprint.com, and we'll throw in a bunch of really cool bonuses that I think will help you in your real estate investing business. So let me bring in my guest today. These guys are, Randy is in Little Rock. He runs a REIA. He's been investing, for 1 million years, and got 1,000 stories to tell you. And then Nick is out in Colorado, much higher dollar market, and he is just slaying it out there with a 12 house blueprint model. So we're going to bring those guys in. And guys, welcome to the Sub 2 Deals Show.
Hey, thanks for having us.
Yeah, glad to have y'all. Randy is muted again. So, well, old folks like us have a problem with technology. I know I do a bunch here and there. But anyway, so let's get going. Guys, I'd like, first of all, both of y'all have been on the podcast previously, but for anyone that hasn't listened or seen this already, let's start out. Who are you? Where are you? Tell us about your market and what you do there. What's your thing? What is your ideal deal when you're out there in the marketplace? Nikki, I don't know if Randy's back up yet. You want to get started?
Yeah, absolutely. My name is Nick Monge. I'm here in the Denver market. It is very slow right now. Very, very slow of a market. It's been slowing down probably since middle of 22 when interest rates started going up. But primarily I'm a real estate broker, so I do a lot of foreclosure work. But my favorite thing to do is sub 2. It's my absolute favorite, right? So that's kind of what I'm doing. And that's kind of what I'm trying to specialize in. I've really shifted my business model from mostly broker type work to focusing more on the investing side, doing more sub 2s.
I know you do a ton of deals out there right now. We love to watch you come in. Nick is actually in our Max Platinum program, and he comes in there all the time talking about the deals that he's doing, the down payments he's getting, the cash flow he's getting. It's really funny, Nick. I remember having a phone call with you probably 4 years ago. I was on my way to the airport. Jody and I were going on a trip. and you had booked a call with me, and we were talking. You said, "Man, I've been listening to your podcast. It's funny." And now we're on here.
Yeah.
And I'm interested in this subject too. How does it work? But you have taken that thing, man, and you have just perfected it. And you're doing a ton of these 12 house deals out there. So, and we want to get to more of that in just a few minutes. Randy's back, and I want to find out a little about Randy. Where are you? What market are you in? Tell us about it and what you do there. What's your specialty?
Well, my name is Randy. As you said, I'm in Little Rock, Arkansas, right in the center of the state. I've been doing this. I bought my first house in 1987 and became full-time in 2010-11 and haven't stopped and looked back. As you said, I run the Arkansas Real Estate Investors Association here too, and we teach other people here in Arkansas how to get started, how to do things. We joint venture with them, try to teach them how to use private lenders, pretty much all the different things. We bring in speakers. You've been a speaker 2 or 3 times here. Maybe I need to get Nick down here as a speaker too. But
yeah, let's get that Nick down to Little Rock.
Anytime.
And we do a little bit of everything. We've been doing subject to for 25, 26, 27 years.
Wait a minute. Now, subject to hasn't existed for that long, has it?
Oh yeah, baby. Even before I started doing it, I think my first sub to was either 97 or 98.
Yeah.
And I didn't do another one for a few years, but I got my teeth wet on that one.
Mm-hmm.
And but you know, it's my favorite strategy.
Mm-hmm.
I don't always do it. We're actually doing one today on a house that I went to look at today. And the seller just needs to be out from underneath it, period, walking away. And the house, other than carpet cleaning and cleaning out some of the stuff in the house, is move-in ready.
Mm-hmm.
So I love deals like that, but we do a little bit of everything. We'll assign contracts. Some people call it wholesaling, but here in Arkansas, we don't like that term.
Right.
We do options. We buy notes. We do owner financing stuff. We do a little bit of everything.
Right.
Just because I've been in it so long, I've been exposed to so many different things.
Sure.
So when you get exposed to things, you see animals in the clouds.
Yeah.
So
well, that's just
about me.
Yeah, that just as you've been in the game for a long time, you learn new things. It's just another tool for the toolbox. And then when you meet with a seller that's got a problem, you've got several solutions that might solve their problem. And that's great. And I generally, even if I see 2 or 3 ways to go with something, I'm going to present the one that I want to do, the one that's most favorable for me. And that's almost always, if there's existing financing on that property, man, I want to take it over if it's got a good interest rate.
As long as it solves their problem, that's all they care about.
That's right. I agree.
Exactly.
It's still amazing to me the number of people that, and I remember thinking it myself, and you guys may have had the same thought when you were first told about buying property subject to, and you say, oh man, nobody's going to do that. But if you present that as the solution to the problem, a surprising number will say, yeah, that'll work. Let's do it.
Yeah.
Y'all both find that to be true?
Absolutely. I think this market that we're in right now is probably one of the best markets, in my opinion, for sub 2. Because what I'm seeing a lot of is short sales popping up left and right.
Right.
So just this morning, I was speaking with this couple that are going through a divorce in Colorado Springs, have a 2.5% rate on the property. She understands they have no equity in it, and she's just ready to get it done. She's like, I don't want a foreclosure, whatever I got to do to get this taken care of. So I have 16 short sales right now, and many of those people would be happy to sign a deed over.
Right. Well, now on that note there, Nick, and Randy and I don't have, I think, the issue that you're going to be facing. Jody and I lived in Colorado Springs 5-6 years ago. And man, when after COVID, when those prices started going in, I mean, that was one of the top 2 or 3 markets in the country. It was seeing correct me if I'm wrong here, 25% appreciation a year.
Yeah.
I remember one of a big time realtor out there that used to do a weekly vlog on it. I remember listening to her 3 years ago say, we can expect 10 more years of this. And I thought, lady, were you not alive 15, 20 years ago? There's no way. I mean, the median price of a home will be $1 million. Come on. Wait, you're a realtor. You're supposed to be the expert, right? And sure enough, we get to a certain point, we flatten out, and now we're seeing short sales.
Yeah.
For years we didn't see short sales.
Yeah.
So how do you protect yourself? Like this couple you were talking to earlier today, 2.5% loan, no equity. Is that a deal you would take in your market?
So it really depends, right? It either needs to have a little bit of equity or cash flow, right? And what I'm running into nowadays is plenty of cash flow, especially with a 2.5% interest rate. So even if there's not a ton of equity there, I work with a lot of Hispanic buyers that would be happy to take over a loan, even if I bump the price up a little bit, just for the convenience of a seller finance deal. So at that rate, I did crunch the numbers earlier, and it's going to cash flow, if I were to purchase it, at least $400 a month. Right. So it's absolutely something I would take on, even if it didn't have any equity.
Right. So, but how do you protect yourself? Let's say this house is worth $450, and the worst case scenario happens, and a year from now it's worth $400. How do you protect yourself in that case?
So when I buy these, I'm looking long term, right? So eventually, in my opinion, prices are going to go back up, right? So that's kind of the way I see it. Homes fluctuate in price. As long as I have somebody in there paying the mortgage every month, I feel pretty safe. Right. So that's kind of the way that I look at it.
Gotcha. What do you think, Randy? If you were in a situation where you were buying something with no equity, what's the current thing going on in Little Rock right now? What's the trend?
Our trend is sideways to down. Things are getting softer. Foreclosures have picked up. They've about doubled here in the 2 or 3 counties around me over the last 3 or 4 months. I see, me personally, my crystal ball has storm clouds in it with lightning bolts and everything like this. It's very hard to see. But my general feeling is, listening to people that I respect and know that are very high-end people, kind of goes along with what I'm thinking here, is the next 2 to 3 years are going to be kind of like 2009 to 2012. And I don't know exactly when it's going to start, but I told my son this weekend, is that the next 2 or 3, 4 years is going to be the next opportunity to make bank, just like 2009 to 2012. For people that know how to negotiate owner financing, subject to those type of deals, it's going to be just a wondrous time. My last time that I went through this, through 2009, I was in the middle of a divorce and I couldn't do much of anything. So I kind of missed the boat during that time, the best of the best years. I'm not planning on missing it this time. And but for an investor who understands subject to owner finance, those type of things, they can build their retirement in the next 3 to 5 years. They can make their life and their family's future in the next 3 to 5 years, in my opinion.
Yeah. We're, of course, Randy's in Little Rock. We're in Northwest Arkansas, which is like its own little pocket. It's different in a lot of ways. I tell Jody all the time, I thought we were moving to the South when we moved to Northwest Arkansas, but we really aren't. We've got some of the largest industries, in the country right here in this location. And I read a number recently that said 100 people move to Northwest Arkansas every single day. The traffic here, you were just up here, Randy. The traffic here is just insane. I've lived in some pretty big cities right outside of Atlanta, Memphis, some other places, and the traffic here is so bad because the infrastructure just isn't set up. There have been constant road construction here, and I've lived here now 3 years. It's just constant expanding and growth. So it's really growing here. So we're still seeing a pretty steady 4+% growth here. Prices are still going up. Things aren't selling as quickly as they were.
That's for sure.
Yeah. 2 years ago, 20 days on market, boom, that's it. They were turning just like that. Now we're 60+ days. So it's taken longer to get that done. I'll tell you, back to the original question I had for Nick, the way we protect ourselves when we're buying something with low equity in a flat or just even a declining market is to make dang sure that we could cash flow as a rental. That's my plan B. Okay. Worst case scenario, I put Bob in my house. I bought it for $450. It's worth $470. I sell it to Bob. He's in it. And 2 years from now, the value's $400. And he says, hey, dude, I owe you more than this house worth. Here's the keys. I'm out. People did that during 2007, 2008, and they called it, what was the term for it, Randy? It was a
strategic or something.
Something for a selective foreclosure or it was on purpose, basically.
Yeah.
And, but that's pretty rare. People move into a house, it's their home, they raise their kids, they got their dog, and they just go with the flow. Market declines. Oh, well, I'm still making my house payment. It's still my home. It's not like an investment property. Strategic foreclosure, that's what it was. Investors will walk away from stuff if it doesn't make sense. It's a numbers thing for them. But people that live there, it's an emotional thing. But just in the case where Bob did hand me the keys back, I would want to know. Now, I've got a house now that's worth $400. I still owe $440. I can't sell that on another contract for deed in good conscience, right?
Yeah.
We say right.
Yep.
Because some would, man. Randy, you've known some of those guys.
Yes, I do. Unfortunately.
But we can still rent it. And as long as we can rent it and not have to feed an alligator, I feel pretty safe about things. I don't know about y'all, but that's my philosophy.
Right. And the other thing is when defaults go higher, usually rents climb because there's more demand for rental properties, because somebody that's been living in a house doesn't want to go to an apartment. They want a house.
Yep.
So demand is higher and rates climb. So you can make a pretty good spread that way too.
Yeah, for sure. Okay. But I hate rentals, man. That would be a very distant plan B for me. That's for sure. So I want to ask you guys this, and whoever, Nick, you can go first. Randy, you can. What are you really, from the time? Okay, you've been doing it forever, Randy. But Nick, you've been in the game. I mean, really hard for the last 4 years, say.
Yeah.
What have you seen change in your market? You said more short sales. Prices have flattened out. But anything else that you're seeing there? And what have you changed anything in your business model to pivot for that?
Not really. Obviously the market has changed pretty drastically, especially here. Colorado Springs, it's gone down pretty significantly. I've been pretty much doing the same thing ever since. I keep it super simple, but I am seeing a lot more opportunity today than I was before, because the market, when I first started, was really hot. Interest rates were low. It was really hard to find these sub 2 deals for me anyways. I was just getting started.
Right.
So yeah, as far as marketing and everything, finding deals, nothing really changed. I've always been a cold caller. And that's really what I've had success with. So
yeah. I've always joked with you that you being a realtor, you have this unfair advantage over the rest of us because you have immediate respectability when you reach out to somebody with an expired listing. I know you send to target expired listings. Yep. People that are, man, they couldn't sell it. What are they going to do? Now they're desperate. And then you call them and, but you're a realtor. I mean, you've got a license. That means you're an authority. So you automatically have trust. Where investors, man, we call them and we're like, we're the evil guys, right, Randy?
Yep.
So,
Just a step higher than a used car dealer, right?
right.
Yeah.
So what about you in your market, Randy? What have you seen really significantly change in the last couple of years, and what changes are you guys making?
Really, the biggest change that I've seen, really the last 4 months, is sellers are a lot more open to discussions about more than just a cash offer. They're open to anything, and it's the last 3 or 4 years we didn't do a lot of sub twos or owner financing because there was just a shortage of properties and everybody could get what they wanted, and there were too many quote wholesalers from all over the country calling our area.
Yeah.
And so but what we're doing right now, what I explained to my son who works for me, is we've adjusted and we're buying more low-hanging fruit and passing on a lot of marginal deals. Or if we do a marginal deal, it's strictly an assignment type situation, because we're not going to be holding it.
Right.
And so sellers are getting, I don't want to call them desperate, but they're getting more motivated, and it's easier to talk to them when they're more motivated. And so that's the biggest change that I've seen. And that's, we've changed our business model based upon that, just to like on sub twos, we're not even looking at anything that was purchased after 2021 right now. Interest rates rose. They've got no equity. Usually they've lost equity because the market's probably off their highs, for the most part. Maybe not up in your area, William, but in central Arkansas here, most properties have lost a little bit.
Right.
Not they're sideways. So and by the time they've lived in it 2 or 3, 4 years, it needs paint, it needs flooring, a few other things like that. So we're looking more for deals that have more equity and people that are willing to negotiate a little bit more.
Yeah.
Randy, you said something, and I'm pretty much doing the exact same thing. So you mentioned you don't look anything past 21, right?
Right.
So interest rates started going up, what, like May, June, July of 22?
Exactly.
So yeah, so I'm specifically looking for VA and FHA loans, mostly in Colorado Springs, and I only look from maybe June of 2020 through March of 22, right before rates started going up. And that's specifically what I'm looking for right there when it comes to sub two deals. I could probably go a little bit further left if I wanted to as far as the date, but that's exactly what I'm looking for. Because a lot of the people that bought after high interest rates, it's really hard to make it make sense.
Yep.
Yeah.
Yep.
But we're seeing a lot more. We buy foreclosures too, and we're seeing a lot more foreclosures with properties that their mortgage is 2007 to 2015 versus 2015 to 2024. But we've always seen a lot of 2 or 3 year new mortgages going through foreclosure, but right now there's a lot of 23s and 24 mortgages that are in foreclosure right now.
Yeah, for sure. And you see I know you guys see this stuff I'm talking about. The other night, we Jody and I had dinner with Randy and Anthony, and I was telling him about some of this stuff these people send me. I had a guy send me a deal that I know you're going to be interested in Tampa. And you're looking at it on Google Maps, and there's a pawn shop across the street and a bail bonds place on that corner. So I know I'm in a bad neighborhood, right? And it's no equity, and it's just, but these guys send you this stuff like, there's a $30,000 entry fee or whatever we always call that acquisition cost, Randy. I don't know about you.
I'm old school like you.
Yeah. And I'm like, and I had a guy tell me about a deal yesterday in Houston. It's like a $225,000 house, a $39,000 entry fee. I said, do you know that you could get a conventional loan for less than 20% down. Okay. I mean, you don't have to go do this stuff. And, but these guys think these are great deals. No equity, no cash flow, negative cash flow. And when you question them about it, what do they say? It's an appreciation play. I was like, well, you missed that by about 5 years, buddy.
Yeah.
Okay.
Yeah.
You know, and that's because you don't know what you're doing. But when you're talking to people that have been doing this for a while, they see things completely differently. You know?
So here, Nick, here's a thing for you. You're getting ready to see something that I don't know how long you've been a realtor, and I know you haven't been investing for decades like the old man over there and I have been. But when this market changes, like it looks like it is, and realtors can't sell product and they can't make their own payroll, that's when you step in and tell the other realtors, bring your deals to me. I can probably close these deals and pay you, get you your side of your commission or something like that.
Yep.
You will be the one that keeps them in the business, but they'll be your feeder, and you won't have to work as hard because they'll be bringing you deals.
Yeah, no, absolutely. It's hilarious that you say that, because just before we got on this call, I was sitting here thinking, and I was like, there's a lot of short sales nowadays. What if I just hop on the MLS, filter out short sales that are on the market for more than 90 days and reach out to these agents, say, would they consider a sub 2 deal? I was thinking the exact same thing. So yeah, I think it's, like I said, I think it's a huge opportunity right now. And I'm very excited because I'm getting a lot of deals are just falling in my lap right now. I don't know what it is. I started going to this investor meetup here in Denver recently, but deals are just kind of coming to me and I love it. So,
you know, about 4 years ago, Jody and I put together a website, postcard sequences, everything. We called it Agents Plan B. And then the market exploded. You couldn't get any agent to talk to you about anything creative at all. And I'm thinking that in the next year or two, that might be something that we can actually finally start using. And it's, hey, I mean, basically it's, you got properties sitting on the market. They've been on the market 4 or 5, coming up on 6 months. You're going to lose this listing. You're going to lose your opportunity. Let me come in there with a solution. You'll get your commission and I'll get this deal, right?
Yep. We used to do that back in 2009, 10, 11, a little bit. Mm-hmm. And we've been kind of building towards that. Anthony's been out. One of his deal is try to have coffee with 1 or 2, 3 realtors a week, introduce what we're doing, how we're doing it. So you may not need us right now, but it's coming where nobody in your office is going to be selling deals. And if you bring deals to us, you'll be making deals, and everybody in your office is going to be wondering how you're making money, and none of them are. So you're helping your customer out, you're helping yourself out, you're helping your company out, you're helping us out, you're helping the tax base out, because there's not a house in foreclosure that kids are breaking into, vacant, party animals, squatters moving in, stuff like that. So you're helping all the way around. And the reception that we get from realtors is, yeah, I don't have a need right this second, but I can see something like that really working somewhere down the line.
You're so lucky, and Nick, you're so lucky where you are too. You have that in because you're a broker. Randy, you know my story up here, man. These people are crazy up here. So we'll see how that pans out in Northwest Arkansas, which is its own little island out here, and all these.
We don't even consider you part of Arkansas here.
I know. That's exactly right. Well, I'm the 51st state up here in Northwest Arkansas. So where do you guys see, Randy, you tell me this, where do you see your market in the next 12 months? What's going to happen? Where are the opportunities going to be? What's going to change?
A lot more foreclosures, so that's going to open up a lot more sub 2 possibilities. Our biggest growth is probate, because the baby boom generation is getting older and older by the day.
Our bunch is just kicking off left and right. Yeah.
And they're moving into nursing homes. Most of the family members don't want to have rental properties if they own rental properties. so they want to get rid of them. A statistic that I looked up last year when I was speaking at a mastermind group about this was that almost 35% of all properties in the United States are owned by somebody 65 and older. 1/3 of all the properties. Those are all going to transfer over the next 10, 15, 20 years to either the younger generation or be sold off. So that's our biggest growth. Foreclosure, of course, is going to be a big growth because it's coming back. And then I work a lot with Medicaid lawyers and stuff, helping people transitioning into senior care, sell their property. We buy different ways. And most of these houses haven't been updated in 40 or 50 years. They're hoarder houses, kind of like a foreclosure house sometimes. And so that's our three biggest things. And I think all three of them are poised for double-digit growth in the coming years. We just have to do our part of it and be out there and be ready to do stuff. Yeah. So, I'm not advertising here, but, we don't use banks a lot. We use private lenders and stuff. So we're always growing our private lender base because that gives them an opportunity to make better funds than they could in a bank CD or gambling in the stock market. And so we offer a alternative to that. We get to know them really well, but it allows us to move quickly. Foreclosures, a lot of times we get a call 48 hours from auction.
Right.
With my title companies, typically if there's no title issues other than the foreclosure, we can close in 48 hours. Very few people can do that. So offering solutions that nobody else can offer is our specialty. And of course, we also do a lot of title issue properties.
Right.
Or family drama issue, title issue properties.
Yeah, it's a good way to put it.
Yeah. So we have a lot of specialty stuff that nobody else really does. Right. But that comes from years and decades being in the business.
Yeah, for sure. You can't beat experience. You know what I mean? All right, Nick, what about you? What do you see in the Colorado market in the next 12 months?
Randy pretty much hit it right on the head. I pretty much agree with what he's saying. We've been seeing tons of foreclosures. They're just really ramping up. We've had, I think, in the first 7 or 8 months of this year, more than all of 2024, right? For each individual county. Mm-hmm. That's kind of what I'm seeing. I don't think much is going to change with the interest rates. So I think home prices are either going to continue to decline slightly or kind of stay flat. And that's kind of why I'm excited, because I think Randy, you said you did your first deal in 87. Is that correct?
97. 87. First deal.
I was born in 92. So,
yeah.
So like I wasn't around during the big crash in 2009, 10, 11. And I'm personally excited for that. I think there's a lot of good opportunity for people, especially newer people that are trying to learn the business. But, I pretty much agree with Randy on that. I think there's going to be a lot of foreclosures and people having issues selling their homes traditionally.
For sure. While we're talking about foreclosures, I want to bring something else up that Nick, you were telling me about a deal earlier this week that was a foreclosure deal. But when you started talking to the sellers, it got a little bit deeper than that.
Yeah.
You want to share a little bit about, and this is my big concern, and this is going to carry over into something else. Randy, you and I have talked about this a bunch, about how when a big marketer comes on the scene and they push a model and it gets abused and used and morphed into something that's not helpful to sellers anymore. When you bring stupid into the equation, which is the only way I know to put it, you start having issues. And the thing that worries me about it is, it's fine to make it famous, but you're going to harm it, and then there's going to be legislation to fix it later. So I'm going to let Nick tell his story. Randy, you know what I'm talking about. Briefly tell us about that story. These people are in foreclosure. That's how you discovered them, I guess. What got them there? What happened?
Yeah. Like you said, I think there's a lot of people that are getting into sub 2 and they're not, I don't know, quite as good as they want to be, or they get into it and they don't think long term, right? So essentially what happened with this was it was a new couple that was in foreclosure. So I did my normal process and I called them, and I spoke with them, and they were very confused at first. They're like, what are you talking about? My home is not in foreclosure. And they were like, I sold that property about a year ago. I'm like, okay, let me look at the tax records really quick. Let me pull this up. And I asked them, I was like, did you do like some sort of creative finance deal? And I was just kind of fishing a little bit because I know what happened. And eventually I got to the bottom of it, and they're like, yeah, we sold the property. The loan is still in our name. And, we sold it to a trust. I was surprised that it went in a trust. They actually did that correctly. But what happened was they sold that property to an investor that assigned that contract to a different investor who assigned it one more time to somebody that actually closed on it. Okay. And this individual had
the one that closed on it.
The one that closed on it had his boss's son renting the property from him. He was collecting the rent. The son that was living there he was just a renter, right? He was making his payments, but the guy that had closed on it was collecting that money, and he wasn't making the mortgage payments, right? So I had to do a lot of tracking down. I finally got him on the phone, and I was able to reverse all this. I got a quit claim deed signed back over.
He sent that to you?
Yeah. So
Okay.
I sent him the pre-filled quit claim deed. He signed it, notarized it, because I told him, I was like, listen, I know what I'm doing. I have people that know what they're doing, and you're going to get in big trouble if you don't correct this, right? And he didn't have the money because he spent it all on stuff to reinstate it. So he wasn't able to do that. And that's what happened, right? So it was just a process of finding this guy, and I was able to help them, luckily.
So they thought they sold it to someone who daisy chained it 3 times down.
Yep.
And then this guy rents it, collects rent, doesn't pay the mortgage.
Correct.
What do you think happens to people, Randy? I want to ask you. I know I have my idea. It's a VA loan. They're equity skimming a VA loan. You think that could be problematic?
Government loan, the government loves to come after people. And I want to go a step further than this and I've seen this, and I warn my REIA people here, in my opinion, I would never wholesale or assign a subject to deal.
Never.
Or sell it after I've closed on it either.
Right. Unless you're going to stay
as a sub 2.
Unless you're not as a sub 2.
I'm going to do an owner financed where I kind of wrap it, but do something where I'm still in control. I'm collecting the payment and making the payment. That's one thing. Yeah. But I see a lot of people will sit there. They'll get all the paperwork. They'll get the Social Security numbers. They'll get the login to the bank, and then they pass it to somebody else. Right. In my opinion, that is a federal offense. That's hacking into a federal bank by the new buyer and the original buyer passing that along. I would think that would be a conspiracy type deal, because they don't have authorization to pass Social Security numbers and logins and passwords to banks and stuff. And so there's a possibility there's going to be a lot of people in trouble here in the next decade. And there's going to be a lot of foreclosures, just like the one you're talking about. This happened back in the early 90s here in Little Rock. There was a guy that I knew, a good, quote, church-going guy, that apparently was doing that exact same thing. But he was out there. He had 90 some odd properties, I think, collecting rents and everything and never paying the mortgages. And, hundreds and hundreds of thousands of dollars he collected, he never paid mortgages on. And when I think the FBI got involved, he hightailed it out of state. I don't know where he went. I don't know if they ever caught him or anything like that, but hundreds and hundreds of thousands of dollars just disappeared in this guy's pocket. So you got to know who you're doing business with. And, I don't think that there should be a sell-off. And I know some people, quote, teach that in this business. A wholesale off a sub-2. And I think that's about the worst thing you can do.
Yeah.
My responsibility is to the people I negotiated with to keep them safe and everything like that as best as possible. Sometimes the seller do stupid stuff too.
Yeah.
But, and you can't fix that. But, you know, when you pass that along to somebody else and you're kind of trying to step out of the middle of it, you're not out of the middle if something goes wrong. Like you said, on a VA or an FHA loan, the government's going to get their pound of flesh at some point in time.
Yeah, because there's insurance on that loan. Somebody's got to pay. When that foreclosure happens and there's a shortage, an insurance policy has to pay. People usually go looking for somebody to blame anytime an insurance policy has to pay.
Yep.
Right. Am I right? Yeah.
Yeah. Sure. These banks and mortgage companies on that meltdown in 2009 and 10, these GSAs, government agencies, came back to the banks and mortgage companies and said, hey, you sold this loan as being conforming and stuff like that. And it wasn't. You're going to eat this loss.
Yeah. Do you have something, Nick? I thought you were going to say something.
Oh, I was going to say, this particular deal that I just kind of explained, it's funny because when you daisy chain like that, just like Randy said, you kind of have that relationship with them, right?
Right.
You built that rapport with them. They trust you. They don't expect somebody else to be logging into your bank and making that payment, right? So when I made contact with these people, they were only aware of the initial person they spoke with.
Right.
You know, I started speaking, oh, well, I found this person and this guy assigned it to this guy, and this is the guy that actually closed. Were you aware? He's like, no, I've never heard of that person before.
Yeah.
Right. So it's just so weird. Like I agree. I could never ever assign a sub-2 like that. I don't think it's a smart play at all.
Yeah, I've said that for years. You can't assign a subject to because, and I don't know the name of your couple, we're just going to call them Bob and Sue, because if Bob and Sue decided that they wanted to go after let's say the house had gone to foreclosure and trashed their credit for years. And if he's in the military, that can impact, a lot of people don't know this, that can affect your promotability.
Or security clearances.
Yeah. So now they've got a foreclosure. If they decided to go after whoever let this happen, they don't even know about the second and third guy. They're going after the one that signed those docs. So you're going to be a plaintiff, a defendant in this lawsuit if you do these things.
Yeah. And that's what I told him. Because I reached out to him. I had to kind of find each individual person. Right. And I told him, I was like, listen, you're the one that signed the contract with these guys.
Right.
Your name is on there, right? So you're technically responsible. You got to help me out here. And he did, because he knew he was going to be in trouble. But
but you got them all squared away now and got a good deal in the process. I think you told me you already had a buyer, didn't you?
Yep. Already have a buyer for it. It's going to be a solid deal.
Yeah, that's great. Okay, so great content, man. This is the real stuff. I mean, there's people out there every day buying houses, doing business, and you don't always get that on the internet, do you?
No. There's a lot of people out there on the internet that they may have done one deal, but they're awesome speakers, charismatic, and they are experts on the internet. But knowing this business, that's a whole different thing. And they've only been in the business 3 or 4 or 5 years.
Yeah.
They've never been through a downturn.
Yeah.
You and I've been through a few of them, haven't we, William?
Man, I'm telling you, every time, and they keep doing these things. What did Rocket Mortgage roll out, a 1% down program a few weeks ago?
Whether there's and they will finance up to 101%.
Yeah.
And because I finance closing costs and stuff like that in there too. And
then there was something else not too long. I said, man, these guys are reading from the 2007 playbook.
Yep.
I mean, they just cracked that baby open again. And I'm like, am I the only person that was breathing during that? Do these people not remember? But
yeah,
I don't know. If we don't remember history, we're doomed to repeat it, aren't we?
Yes, we are.
All right. So So what advice do you guys have for anyone that's brand new, that's been looking at real estate? Man, they've seen people make all this money the last 3 or 4 years. And now, as we're starting to do the dive, they decide now's the time to jump in. What advice do you have for them?
So for me, like you said at the beginning, I mean, I literally got started in sub two listening to your podcast. I think I would start with a very minimum of a light foundation, right? If you're trying to get into sub two, listen to some podcasts, credible podcasts, read a couple books, just make sure you kind of understand the basics, right? Once you do that, I mean, maybe at the same time, go to some meetups, right? Meet some local people that are actually doing deals, right? Learn how they're acquiring deals, how they're finding these deals, and I don't know, take somebody out to lunch or something. You know, that's kind of how I would start.
Mhm.
I think it's the easiest way to do it. It's basically free, except for, you know, buying a couple books. But I think that's probably the best way to get started, or, you know, just joining a group.
As somebody,
That's the young person's way of doing things.
oh, I know, and that's why I wanted to ask. And you know, I mean,
Yeah.
we're all friends here. Nobody's picking on anybody. But
Yeah.
as the new kid, Nick, I want to ask you this,
Okay.
because for old people, experience rules, right? I mean, it's experience.
Oh yeah.
As a new person, how do you know who the heck is credible and who to listen to? How do you, if you've got to make a choice, do you listen to the guy with 500,000 followers or the guy with 6,000? How do you know who is a good person to listen to?
You know, you have to have a good judgment for sure. I'll say that, because I feel like most people are going to answer that like, oh yeah, whoever has the most followers is going to be the best one.
Yeah.
I totally disagree. I think those people don't have as intimate type groups of people, right? And I mean, I've joined masterminds in the past with thousands of people in them, and it was awful. You didn't get
Yeah.
the information you needed. You weren't able to call up and talk to somebody, you know, on the phone. So for me, right, again, when I started learning this, I listened to some podcasts, right? I think I listened to the first 6 or 7 of your podcasts, and I had done my first deal. And when I did that, I knew that it was legitimate, right?
Yeah.
So that's how I know, right? I don't want to toot my own horn, but I think I'm a little bit more wise than, I don't know, your average person that just wants to jump in like everybody and
Mhm.
start doing deals, right? Like, I don't know. So that's my 2 cents, I guess.
Well, you do have to have some discernment, because some people make it, and I'll tell you this, and I've been to, I've had mentors, I've had people teach me how to be a good teacher, how to be an influencer, how to do this, how to make these videos, how to get followers, and it's really funny, and that's one of the reasons that I find I'm really torn. I enjoy teaching, but I don't want to be a big influencer, because some of the things they tell you to do, like I was told, don't use words like work or effort or learn. Those imply that somebody's going to have to work hard to be successful. And I said, well, guess what? You do. Okay. You are going to have to put in. Now, my job's not hard for me today, but I've been doing it for a quarter of a century. You know, I've got a master's in real estate now, right? Randy, you know what I'm talking about? It's hard in the beginning.
Yeah, it is. And, you know, you're a little bit different because it's just you and your wife, and you've got a special game plan. But, you know, Nick, myself, you know, I've got employees and stuff. We do more volume, and it's a job. I mean, it is work. I don't care what you do, there's work involved. But most people see all the stuff out there on YouTube and Facebook, and they think it's just going to fly in and land on that silver platter in front of them, and all they have to do is sign a piece of paper or maybe a check. And, you know, I got a term that I use. It's called Goya, Goya. And it's not the food brand. It's get off your assets. You gotta get,
That's right. Yeah.
you know,
Yeah.
you have to get up and actually go out there and do some marketing. It all starts with marketing. You don't do marketing, nothing else is going to happen.
Yeah.
And marketing
Yeah.
is a job.
Yeah.
And so, you know, it's nobody wants to work anymore. It seems like, and the ones that do don't want to study, and
Yeah.
it requires both.
Yeah.
One of the things you were just asking him was, how do you know? It's like, to me, especially with subject to me, that's the most complicated part of this whole business of all the different strategies. You do it right with the right paperwork, or you can get yourself into trouble. If you've got all the right paperwork and you do it right, it's fairly easy.
Mm-hmm.
But you need a mentor who's done this for years. You need a coach that can coach you through the steps, or somebody that you can rely upon to pick up the phone and call. If all you're doing is listening to online stuff, you're not going to have the paperwork. You're not going to have all the other stuff. I'm not touting your stuff, even though I've got your stuff there, William, because I like to know what other people are doing.
Right.
You know, your paperwork is pretty darn well complete and will keep people out of trouble. And I don't know what you charge for it anymore, but I know you just sold it here at our REIA meeting 2 months ago. But you know, it's less than $1,000 if I remember right. And it's like,
man, I'm cheap. I'm a cheap date.
yes. Whereas other people are selling it for $10,000-$20,000 and stuff like that.
Yeah.
But for $1,000, just the contract forms that are in your system would cost you more than that to go to a lawyer to get.
Yeah.
Yep.
Okay?
Most lawyers wouldn't even know how to put it together.
No, they don't. You know,
Right.
some people, some lawyers and some title companies think it's all illegal. They still say that.
That's right. Yeah.
Until you ask them, well, how is it illegal? They can't answer the question.
Right.
Yeah.
And so, but getting a good coach, mentor, teacher is, I think, imperative if you're going to do this type of business. But I think any type of business, you can take years to learn it, or you can learn it in a compressed time frame, month to a year. And it's the best money you'll ever spend, in my opinion. And I don't coach anymore. I used to. I run the REIA, but I bring speakers in and let them do the coaching and stuff. But it's the best money I ever spent when I was learning this business. When I lived in Arizona, when I lived in Florida, I went to pretty much every event, and they had events 3 and 4 days a week to learn, to listen to speakers and buy products and stuff like that. To me, that's where you learn.
Yeah. Yeah. I know what you mean. And I'm certainly not trying to say that I'm the only person that teaches this properly, but I'll tell you what, what I have found to be true is it is the more obscure people, the people that you haven't heard as much about, that do a better job of teaching. It's more affordable and it's real. And you definitely want somebody that still does it, not somebody that did it 20 years ago and they're talking about that now.
Oh yeah.
But I'm telling you, if you're learning from somebody that's got 1 million followers or whatever else it is, and nobody heard of them 5 years ago, that's going to be a problem for you down the road, I think.
Yeah, especially when this market turns.
Right.
They will not have lived through it, so they wouldn't know what to do themselves.
That's right.
Yeah.
And I don't know how many people tuned out when we started talking about work, but there's a reason that only 3% of people who invest in real estate training ever buy a house. There's a reason.
Yep.
It's not for everybody. But I'm going to tell you, it's the best thing that I ever did. Ordering that Carlton Sheets course was the best thing I've ever done.
That's how I started too. I ordered that while I was in college.
Yeah, for sure. All right. Any last notes or comments you guys want to make? Nick, Randy, I want you guys to tell everybody, if you want to, how people can get in touch with you, what you're looking for. If you're looking for deals, if you're looking for people to network with, whatever, if you want to share how people can reach you, you guys do it.
Okay.
Go ahead, Nick.
Yeah, absolutely. So probably the best way to reach me, if you want to reach out, is email. I'll just spell it out. It's NICK monge92@gmail.com. You can send me an email anytime. If you're in the Colorado market, I am actively buying. So if you have deals that you are looking to unload, bring them on. I'll check them out. And would love to chat anytime. I'll help you out if you have questions or anything.
And if somebody's got a house for sale, you'll also list it for them, won't you?
Yeah, no, absolutely. I'm a broker too. Just bring them on.
Yeah. Okay, great. Okay, Randy?
All right. Well, I'm going to give you 2 phone numbers. If you're interested in our REIA, learning how to do stuff and network with other investors, it's ARKREIA, ARKREIA.com, ARKREIA.com. And that phone number is 501-358-4620. Or you can reach out to me there at randy@arkrea.com. If you're interested in selling a house or buying a house owner financing wise, the name of our company is Arkansas Property Buyers. And that's, you can get me at randy@arpropertybuyers.com or go to our website, arkansaspropertybuyers.com, and check us out there.
Okay.
But,
we'll put that in the show notes so they'll be able to read it too, and get in touch with you guys if they've got anything else. I'll say this, and I didn't put mine in at the end about advice for new investors. If you're getting started, I would say this: we're going into you've missed the heyday. If you're getting started now, doesn't mean you can't make money. If you know what you're doing, you can make money in any market, right, Randy?
Yep, we make good money when the market's going up. We make more money when it's going sideways.
Right.
And I hope I can say it like this, or you can bleep me. Is we make a hell of a lot more when the market's going down.
Right. Because there's less competition. A lot of investors are bailing right now. We can't wholesale anymore. There's too many laws. There's too much competition. So I'm out. It doesn't matter, competition or not. I'm going to buy a house.
Yep.
Doesn't make any difference. I may not buy every house. Somebody else might get some of them. I've got students right now that get deals out from under me, and that's okay. If they're better than me, if they're faster than me, man, I'm old and I'm getting slow. That's cool. I'll buy one next week. It'll be okay.
Yep.
But just make sure that you buy your deals. Both these guys have heard this before, with certainty of profit. There is no other part of your deal that is so important. Don't make somebody else's problem your problem. Go ahead.
And you alluded to it a while ago, is what is your plan B if things do go in the crapper? What are you going to do? Such as, is it going to rent for enough to cash flow? Right. Always have a backup plan just in case.
Yeah, because you never know. I mean, we're in such strange times right now. We talk about the 2007 playbook and everything else. A couple of years ago, the government intervened. It did something that I never thought I would see happen with the moratorium on foreclosures. So we all, that stopped a market from correcting.
Yep.
You, Randy, I know you know this. I keep going back to your experience in this. A rise in foreclosures, a market cycle, that brings prices down and it corrects things.
Yep. And
we didn't have that.
The weak people out of the market.
That's right.
The problems.
And we didn't have that. Prices, when you've got 3 foreclosures on this street, it makes the property values go down for everybody.
Yep.
We didn't see that happen. And as a result, what happened? Housing is unaffordable now. We didn't have that natural correction. Now, will they stop it again when it happens again? And it's going to. Will they stop it again? Will the median price for a home in Colorado Springs be $750,000 where nobody can afford one? Man, we really don't know what's going to happen, right? It's a little scary, isn't it?
It is scary, and it is such that you've got to study the economy and study the market so that you can make good business decisions for you and your company.
Yeah.
And I've always been that way.
Yeah.
Is whether you're right or wrong, you got to have an idea of where you're going.
Yeah. And all you've got to do to see ignorance in the marketplace is when everybody's on the internet talking about, the Fed's going to lower rates. Well, the increase for housing is going to go way up. Well, the Fed lowering the interest rates 1/4 point may or may not affect anything to do with a mortgage.
Yeah. Yeah.
Right.
More often than not, the rates go up after they do
right.
that.
You know, I mean, what I didn't even check today. What is the rate on a 30-year mortgage right now?
No idea.
It's
I don't
6
know,
and
and
a
I don't
quarter.
care.
Something like that.
Yeah, something like that. So what? And I had this discussion yesterday with somebody talking about, you know, investors and buying houses and what they're paying. I said every house I buy is between 2 and 4%. I don't know what you guys are doing. This is what I'm doing. You know, this is how we do it.
That's one of those filters. It has to be under 4%.
Right.
So
Right. Exactly. Okay. Great job, guys. Y'all are just killing it. So good for you. I appreciate y'all being here today. I'm going to say something. We're going to close out here in just a second. If you're a new investor, if you're wanting to get started, I've got a book launching December 20th. You can order it now during the pre-launch and get a whole bunch of really, really cool bonuses. I think there are 10 or 15 bonuses that come with a $12 book. You can get this book at justbuyahouse.com. Just buy a house. If you're a procrastinator, if you've been waiting, if you've been trying to figure it out, there's several methods in here to get your very first deal. All of them are very simple. Anybody can do it. I'm telling you. Other than Nick is a super smart guy. Randy and I, but we do okay. Right, Randy?
Right.
Justbuyahouse.com. And we're actually going to launch this thing on the 20th, but you can order it now. So get out there and do it. Guys, I appreciate y'all being here today. A lot of really good information. I think you're going to help a lot of people.
Awesome. Thanks for having us.
Y'all go out there, talk some sellers, and
buy some houses.
Exactly.